Today we are going to discuss conceptual framework of income from house property, types of house property, section 24A, section 24B and some other relevant sections. Some case studies on self-occupied house property, tax planning if any, probable questions. Now let's see income from house property. Section 22 to 27 deal with income from house property. It is a category of income under the Income Tax Act 1961 in India. It includes rental income earned from letting out a property and is taxed accordingly. Now, types of house property. There are four types of house properties such as self-occupied, let out, partly let out and partly occupied and deemed to be let out. Now let's see self-occupied house property. The property where the SEG is staying in, which he or she owns. Its gross annual value will be nil up to 2 houses. In case of many properties he or she possesses, only 2 properties annual value can be shown as nil. Rest of the properties will be assessed as per the expected rent and will be treated as deemed to be let out. Some key points regarding self-occupied house property. Section 23 subsection 2 deals with exemption from annual value for 2 self-occupied houses. Section 24 subsection A deals with standard deduction. Here SEC can get 30% of net annual value, that is NAV, as standard deduction. Section 24B deals with deductions for interest on housing loan. Here SEC can avail up to rupees 2 lakhs for construction or purchase and rupees 30,000 for renovation or repairing of self-occupied houses. Now let's see the pro forma for computing income from self-occupied houses. It's the pro forma. Here gross annual value up to 2 properties will be nil, like municipal taxes or tax paid to local authorities won't be applicable as deductions. So net annual value, that is NAV, will be nil. Now standard deduction under section 24 subsection A as applicable 30%. 30% of nil, that is 0. Now let's see interest on housing loan, that is under section 24 subsection B. It is restricted to 2 lakhs. So income from self-occupied house property will be found over here. As we mentioned that you can claim deduction against interest paid for home loan up to rupees 2 lakhs for self-occupied house property. However, deduction on interest is limited to rupees 30,000 instead of rupees 2 lakhs if any of the following conditions are satisfied. Condition 1, the loan is taken before 1st April 1999. Condition 2, the loan is taken on or after 1st April 1999 for the purpose of repairs or renewal of the house property. Condition 3. The loan is taken on or after 1st April 1999, but the purchase or construction is not completed within 5 years from the end of the financial year in which the loan was availed. Now, let's see some case studies. Here, case study 1, Mr. Roy has a self-occupied house in Kolkata. The Municipal Corporation of Kolkata valued it at rupees 6 lakhs. Fair rent is rupees 8 lakhs and standard rent is rupees 6.5 lakhs. Compute tax consequences of the house of Mr. Roy for the assessment year 2025-26. Let's see the tax consequences. Computation of income from house property of Mr. Roy for the assessment year 2025-26. Here gross annual value naturally will be nil. Municipal taxes or tax paid to local authorities, here it is not applicable, so net annual value is nil. Standard deduction under section 24 subsection A, that is 30% of net annual value, that is nil. Now less interest on housing loan under section 24 subsection B, that also is not mentioned over here, so we assumed nil, so income from house property becomes nil. Let's see another case study. Here, Mr. De has a house property in Vashi, Navi, Mumbai. Its municipal value is rupees 40 lakhs, fair rent rupees 48 lakhs, and standard rent is rupees 45 lakhs. Municipal tax paid by Mr. De is rupees 60,000 during the previous year. The property was self-occupied and it was made by taking loan of rupees 60 lakhs from IDBI Bank at the rate of 10% per annum on 1st April 2024. Compute income from house property of Mr. De for the assessment year 2025-26. Now, let's see the tax consequences. Here, computation of income from house property of Mr. De for the assessment year 2025-26. Here, gross annual value, that is GAV, is nil, as municipal taxes is not applicable or eligible for deduction, so net annual value becomes nil. Now, less standard deduction under section 24 subsection A, that is 30% of net annual value, so it becomes 0. Now, less eligible interest on housing loan under section 24 subsection B, that is 10% of 60 lakhs, it is restricted to 2 lakhs. So, loss from house property becomes 2 lakhs as shown in the picture. Now, let's see another case study. Here, Mr. Roy has a 2 BHK flat at Modhamgram in North 24 Parganas. Its municipal value is rupees 60 lakhs, fair rent is rupees 68 lakhs, and standard rent is rupees 70 lakhs. And municipal tax paid by Mr. Roy is rupees 10,000 during the previous year. The property was self-occupied and it was purchased by taking a loan of rupees 40 lakhs from IDBI Bank at the rate of 10% per annum on 1st April 2024. Compute income from house property of Mr. Roy for the assessment year 2025-26. Now, let's see the tax consequences over here. Here, it is clear that gross annual value is nil and municipal tax is not eligible for deduction, so net annual value becomes nil. Now, less standard deduction under section 24 subsection A, that is 30% of net annual value, that is nil, less interest on housing loan under section 24 subsection B, that is 10% of 40 lakhs. Here it is 4 lakhs, but as we know that it must be restricted to 2 lakhs. So naturally we will get deduction as 2 lakhs. Finally, we got loss from house property is 2 lakhs. Here, Miss Mona Lisa has a bungalow house at New Barakpur and a 2 BHK flat at Modhamgram in North 24 Parganas. The details of the properties here shown in the picture. Here, both the properties were self-occupied. Now we have to compute income from house property of Miss Mona Lisa for the assessment year 2025-26. Let's see the tax consequences over here. Here, computation of income from house property of Miss Mona Lisa for the assessment year 2020-25-26, we can see that gross annual value of both the houses is nil. Municipal taxes is not applicable for eligible deduction, so net annual value becomes nil for both the houses. Now let's see the standard deduction under section 24 subsection A, that is 30% of net annual value, that is 0 for both the houses. Now deduction under section 24 subsection B, that is interest on housing loan for bungalow house, that is 1,40,000, and for flat, that is 1,50,000 as given in the case study, as given in the case. So naturally, loss from house property is 1,40,000 plus 1,50,000, that is 2,90,000, but it is restricted to 2 lakhs as per the rule. We'll get up to 2 lakhs. Naturally, loss from house property will be shown as 2 lakhs for deduction. Let's see another case study. Here Mrs. Devi has a house property at Behala in Kolkata. Its municipal value is rupees 60 lakhs, fair rent is rupees 68 lakhs, and standard rent is rupees 68 lakhs. Municipal taxes paid by Mrs. Devi rupees 12,000 during the previous year. The property was self-occupied and it was made by taking a loan of rupees 20 lakhs from SBI at the rate of 10% per annum on 1st January 1998. Compute income from house property of Mrs. Devi for the assessment year 2025-26. Here, gross annual value will be nil. Municipal taxes won't be eligible for deduction, so net annual value will be nil. Now we will deduct standard deduction under section 24 subsection A, that is 30% of net annual value. It is here nil. Now we will get deduction under section 24 subsection B regarding interest on housing loan. Here 20 lakhs into 10%, that is 2 lakhs. But the loan was taken on 1st January 1998, that is before 1st April 1999. So it is restricted to 30,000. Now we will get loss from house property 30,000. Now let's see another case study. Here Mrs. Papia has a house property at Modhamgram in North Chobbish Parganas. Its municipal value is rupees 80 lakhs, fair rent rupees 90 lakhs, and standard rent is rupees 88 lakhs. Municipal tax paid by Mrs. Papia is rupees 20,000 during the previous year. The property was self-occupied. The house was made by taking a loan of rupees 60 lakhs from HDFC Bank at the rate of 10% per annum on 1st January 2008. But the house was not completed within 5 years from the end of the financial year in which the loan was availed. During the previous year, interest was paid rupees 6 lakhs. Now we need to compute income from house property of Mrs. Papia for the assessment year 2025-26. Now let's see the tax consequences. Gross annual value, that is GAV, is nil. Municipal taxes not applicable for deduction. So net annual value becomes nil. Now standard deduction under section 24 subsection A, that is 30% of net annual value, it is here nil. Now interest on housing loan, that is 10% of 60 lakhs, will get deduction under section 24 subsection B. But as the house was not completed within 5 years from the end of the financial year in which the loan was availed, here the loan was taken on 1st January 2008, that is financial year 2007-8. It was not completed by the end of the financial year 2012-13. So the eligible deduction under section 24 subsection B is restricted to 30,000 instead of 2 lakhs. Thus, loss from house property becomes 30,000. It is shown in the picture. Now let's see another case study. Miss Mona Lisa has a house property at Modhamgram in North 24 Parganas. Its municipal value is rupees 70 lakhs, fair rent is rupees 80 lakhs, and standard rent is rupees 78 lakhs. Municipal tax paid by Miss Mona Lisa is rupees 48,000 during the previous year. The property was repaired by spending rupees 8 lakhs, taking loan at the rate of 10% from HDFC Bank on 1st April 2024. The property was self-occupied. We need to compute income from house property of Miss Mona Lisa for the assessment year 2025-26. The tax consequences are here. shown in the picture. Computation of income from house property of Miss Mona Lisa for the assessment year 2025-26. As we know that the gross annual value of self-occupied house properties up to two properties is nil. Here gross annual value is nil, less municipal taxes not applicable, so net annual value becomes nil. Now we will get deductions under section 24 subsection A, that is standard deduction 30% of net annual value. It is nil over here. Now we will get deduction under section 24 subsection B against interest paying on housing loan. Here it is 10% of 8 lakhs, that is 80,000. But as the loan was taken for repairing or renovation purpose, it is restricted to 30,000. So we will get deduction under section 24 subsection B is 30,000. Thus, loss from house property becomes 30,000 as shown in the picture. For self-occupied house property, as its gross annual value is nil, so claiming deduction on home loan interest will result in a loss from house property. This loss can be adjusted against income under the following ways, such as no limit for set off against income from house property. It is a limit up to rupees 2 lakhs against income from other heads. If the loss exceeds rupees 2 lakhs in a year, the excess loss can be carried forward for 8 years. In the subsequent years, carried forward losses can be set off only under the same head. Here, we need to keep in our mind in subsequent years, carried forward losses can be set off only under the same head, that is income under the head house property. Now, let's see another case study. Here, Mr. Roy has 5 properties at Moddamgram in North 24 Parganas, all of which were self-occupied during the previous year 2024-25. We need to compute income from house property of the houses as shown in the picture. Now let's see the tax consequences. Mr. Roy has 5 properties for his own residential purpose. Only 2 houses, according to his choice, will be treated as self-occupied over here. And as per rule, other 3 houses will be treated as deemed to be let out. So let's see the tax consequences. In step 1, as if all the houses are self-occupied, as shown in the picture, gross annual value for all the houses are nil. Municipal taxes are not eligible for deduction, so we get net annual value, that is nil for all the houses. Now standard deduction under section 24 subsection A, that is 30% of net annual value. It is 0 for all the houses. Eligible deduction under section 24 subsection B, that is interest on housing loan. Here it is nil for all the houses. Finally, we got income from house property for house 1 is nil, for house 2 is nil, for house 3 is nil, for house 4 nil, and house 5 also nil. Now let's see in step 2, as if all the houses were let out. In the case, we saw that municipal values were given for house 1 90,000, house 2 50,000, house 3 75,000, house 4 64,000, house 5 90,000, and fair rent for house 1 80,000, house 2 60,000, house 3 80,000, house 4 65,000, house 5 1 lakh 20,000, and standard rent for house 1 90,000, house 2 75,000, house 3 72,000, house 4 64,000, house 5 1 lakh 44,000. Thus, annual letting value becomes for house 1 90,000. The rule is higher of municipal value and fair rent subject to standard rent. It is 90,000. For house 2 60,000, house 3 72,000, house 4 64,000, house 5 1 lakh 20,000. Actual rent receipt for all the houses is nil. Now, gross annual value becomes for house 1 90,000, house 2 60,000, house 3 72,000, house 4 64,000, house 5 1 lakh 20,000. Now, municipal taxes paid here all are nil, so net annual value becomes for house 1 90,000, house 2 60,000, house 3 72,000, house 4 64,000, and house 5 1 lakh 20,000. Now, eligible deduction under section 24 subsection A, that is standard deduction, 30% of net annual value, that is 27,000 for house 1, 18,000 for house 2, 21,600 for house 3, 19,200 for house 4, 36,000 for house 5, and eligible deduction under section 24 subsection B, that is interest on housing loan, nil for all the houses. So finally we got income from house property for house 1 63,000, house 2 42,000, house 3 50,400, house 4 44,800, and house 5 84,000. Now it is step 3. What we got? Difference 1 minus 2. Let's see in step 4. Compute income from house property. Here, income from house 1 and house 5 will be treated as self-occupied, having lowest figure, and income will be treated as for house 1 0 and house 5 also 0. So 0 plus 0, that is nil. Income from house 2, 3 and 4 will be treated as deemed to be let out. Finally, income from house properties together, that is 0 plus 42,000 plus 50,400 plus 44,800, that is 1,37,200. Finally, in conclusion, we can say in self-occupied house property, the SAG is staying in which he or she owns. Here, for the purpose of tax planning, we can get standard deduction under section 24 subsection A, that is 30% of net annual value, and deduction under section 24 subsection B, that is interest on borrowed capital up to 2 lakhs, and deduction under section 80C, that is principal repayment up to 1,50,000. And regarding this discussion, some questions may be asked like this: For further reading, Direct Taxes, Law and Practice, that is by Singhania and Singhania. Publishers Taxman, Student Guide to Income Tax, that also Singhania and Singhania. Publishers Taxman. Another book, Systematic Approach to Income Tax, written by Ahuja and Gupta. Another book, Direct and Indirect Taxes, written by Bhadra and Satpathy. You can also see Income Tax Act 1961 as well Income Tax Rule 1962. Thank you.